Hello guys, hope you're doing good. It's been a while since we did some weekly webinars. So I really asked for a response last time. If you guys comment, I can keep doing this, but if there's no response, also go to sleep. Anyway, so today I wanted to go through some pairs here. Fundamental. Since the US shut down, we don't have the fundamental report. And so that has been a really, in the last 2 weeks, of course, if we don't get the report, then it becomes very difficult to do the fundamentals. But I want us to look at the technical approach of the market. So I'm going to do only the current pairs here. And here, this is Gbpjpy. Allow me to delete what is here. So when you start with our larger time frame is the daily chart here. And on the daily chart, the only thing you can spot is the direction, which is very bullish here. So sometime we can stick to the trend, and maybe the trend has just come to an end. So we'll look at the current price, the top, and we'll go to a little bit larger time frame, the weekly chart, and try to see, are we having a supply on the weekly chart? And if you look around this place, yes, we can say we have the rally, the base, we have the drop. We have here got the weekly chart. We have run into a supply zone here. The fact this supply could be all the way to this low, but it's just refined to that area, right? So as much as we are very bullish, you have run into a supply zone. And if you have done if you have done the technical part in the market, you know that this as well is just like a double top kind of pattern, and the price is in there, and it closed very well last week with a shooting star candle. That one is a reversal candle on a larger time frame. So if you look at this area again, you can look at this area and try to see where's this supply coming from. Compare it with the larger time frame. So I'll scroll back to my left. Okay, and around this place, we have a weekly supply zone. Weekly supply, the rally, the base. If you look around this is a manipulation, but all of them are all indecisive. So you go all the way to this low, you can be able to pinpoint, say, there's a weekly supply zone. So refreshing the chart, we go back, we can see price touches on that area and falls down, price returns to touch this area, and we're getting a sell. A sell actually, so where do we get the next weekly demand? Go lower, there's a zone here. There's a small zone here, which is a demand zone here. Fresh one. Is it fresh? Let me see. Where do this is not fresh, so it's not of high quality. But maybe on a daily chart, it's of high quality, but on the weekly time frame, it's not. So on the weekly time frame, we have another demand down there. Around that area, around this area. Okay, okay, around that area. So we have two areas to look at. We have the larger time frame supply, the immediate supply, and we have the demand zones on the lower side. So right now we have a clear picture of what's happening on the larger time frame, and we have a reversal signal on a larger time frame. So looking at the top of the supply, you can see on the daily chart here, we had a bearish engulfing. We have a bearish engulfing candle here. You can see bearish engulfing candle there. If you have the bearish engulfing candle, you can see this is our new fresh demand zone here. I mean, not demand, but actually supply. After getting this reversal pattern signal, bearish engulfing, and here we have a rally based drop around that place. So once you have this, you can refresh our chart again and look at this area. Price was in, and now we're falling back. So we're falling back. You can start looking into any any demand that is on the way to be the target point. So when you start on the lower side, this is a place that's very far, very, very far. You can start by refining this one. You can start by refining this one to here, and probably around this place. Gbpjpy, this becomes a new demand, fresh and original. And from the current price, where did we get some institutional movement? We'll say on the lower side, drop down, there's a gap, and we have this is our next demand that we should be targeting for that sell, right? For that sell. So from here to here, this is the demand that we're going to target. From that supply, we'll be targeting this demand. And probably the next area is down here. And along the way, we have even some demand here. With high probability, this one is a little bit better. So here this means that our weekly bias next week will be going short on JPY. We'll be going short, so we need to get a good supply. And also look at the valuation of it. The valuation, sorry, what is happening on the valuation here? Just a minute. Get to see the valuation here. If there's anything can add in. Okay, the valuation here did not really give us anything. On the weekly chart, we almost overvalued, but not really looking good. So we don't have valuation confirmation. Let's go to the 4-hour chart. Look at the 4-hour chart. The moment we hit this area, the valuation were overvalued against the dollar. Look at this one. This is just the dollar, DXY. We click on it, it will take you back to the dollar itself. You see, look at the really dollar here, US dollar there. And the other aspect of it is just, we look at gold futures, which is still on trading view. So here we are overvalued and we are inside the supply. The drop has started already. And now we should just look for sales until we hit this demand. These are distance of around how many pips? Okay, around 400 pips from the current price, 300 pips. So on Monday, this means that we can use a lower time frame, 15 minutes, maybe 30 minutes to get continuation to the downside. So here I see a very nice drop. Mitigation, you can see the previous supply that was here. I think let me take you to 30 minutes. For clarity, 30 minutes here we have drop, base, drop. So we have supply zone that was here. Right, mitigation there, and price came on this supply, hitting that supply, and to get a very nice drop. Were we overvalued? Yes, we were overvalued against the dollar, and that was a very nice confirmation to go short. Then around this place, you can see we have a drop, base drop to the downside. So here we have a supply. Most people will take this one. Most people prefer this one. But the supply doesn't start from here. The supply starts from there, from that place. That's where the supply starts from. So to stay safe, just highlight it like that. To take you a little bit on a larger time frame, you can see we got a little bit higher. This is an entire zone of supply. Go a little bit higher. That's the supply zone, as you can see. You can see we go higher. In fact, they might switch higher. They might get to see the original supply. You can see go back. Use larger time frames to define our regions, our area of interest. Yeah, okay. 30 minutes, 15 minutes chart. That's an entire zone chart. I think I'll work with the 30 minutes here to keep this area original. So for tomorrow, let's say that we're looking for shorts. This is our area. Price. If the price is this area, probably my entry will be around that place. My stop loss can be above the zone. Stop loss can always be above the zone there. And the target is all the way, right? All the way down there. And target 1 to 7, this is like 375 pips. This is a very nice swing. Actually, in my community, I have some guys who are still holding the sell from all the top there. They have already collected 100 pips from the supply. This area already have banked around 280 pips. Yep. So this could be just another place for continuation to the downside. We have this small demand here, but these are just pausing area along the way, but we're going to the downside. This is just a pullback all the way to this low before we get any other idea if we continue with start buying or not. But right now we're going short on Gbpjpy. So the next pair, okay, on Gbpjpy pairs, I just want to look at the pound versus the yen. Then we'll go to Eurocard. Eurocard, we're looking for sales yesterday, but things changed at the end of the day. So right now, go back to the daily chart. Always immediate time frame is always the daily chart to support the trend. The trend is here, and we are very, very bullish to the upside. This means that if you're bullish to the upside, you need to understand where are we likely to be stopped. And that's when you go to a larger time frame, support the high, right? And you go to a little bit larger time frame. From daily, you go to the weekly, and you check back to your left to see where do you have the next high quality supply zone. The next high quality supply zone is here. As you can see on a daily chart, we have rally. This base is not clear here, but you have something like this. This is an entire zone on the weekly chart. And highlight it like that, right? But since we don't trade the weekly chart, can go to the daily chart and now work on it, refine the base, make it clean. Here. So let's get a clear base of supply zone here. So from here, we can refine this one to the base around this place, okay? And the top of the daily. Here and here, right? Can keep it like that for now. Drop base, drop, a very nice supply. And now we look back to the current price. Here, according to the larger time frame, that's where we have the supply. This way we'll have a problem when we go up, and on the other side, we have a very nice demand around this place. Very nice demand zone here. Okay, so look at where we are from demand to supply. Demand to supply, like that. Comparing the two, the current trends very bullish. We are still near the demand, that's discount. We can still go to the upside and get a buy to the upside. So you can still measure and see that from this demand to supply, we are not yet to hit equilibrium. Price just went into equilibrium like that, and it dropped back to discount. So you can still go to the upside, you can still get that to buy, the buy to the upside. So right here, we can check this now. We don't need this one, but of course, we just prefer to see if I'm allowed to buy on discount and check the valuation. And the dollar, this is the green one here. It's always the dollar. Click on it and show you. This one is like the dollar. As you see, the dollar is undervalued against the euro because the euro is the base and the card is a quote. And the other one is the GC, which is gold. As well, the value of gold is undervalued against the euro plus the card here. So this means that we go to the upside. Every time we are undervalued against this asset is undervalued, you'll get the buy. Here, the dollar is the one that was undervalued, and this you got the buy. Again, look at this here, we got undervalued, we got the buy. And here again, gold is the one that was undervalued, and we got the buy. And we can go back to history, see buy, and here gold was undervalued, or almost undervalued, but see we got that buy to the upside. So we can really go back in history and do talk of this valuation all the way back. So here, this means that we are allowed to buy the euro card. Where we are, euro card is cheap, and it's good and possible for us to be in a position to buy. What we need is to now identify high quality demand. Right now, there's a fast demand on a larger time frame, but the price still on discount. So you can go on the 4 hours chart and try to look at 4 hours chart, look at where we have a demand. Look at the demand of the 4 hours, look back, we have this drop base rally, look like that. That's our demand on the 4 hours time frame, right? It's a demand. What you just need to make sure that first to buy, you can see institutions bought here. This is the area where the market sort of balance, and look at that. Price was in here. You look at the value of it, it's undervalued against the two assets. Actually, I've not added the treasury bonds, but we're undervalued. And this means that we can now look for long position using this demand, though we have another proper high quality. I like price to come back here. This is the best demand that I have so far, but this is still a nice one here. And here we have what we call a bullish engulfing candle. Look at that. Covering the previous candle, the top and the bottom. Has it really covered? Let me zoom in. Okay. Yep, covering this candle, the top and the bottom. That means that we have a bullish engulfing candle. Mostly when you have this bullish engulfing candle, price, market like coming back a halfway of that candle, from that candle, the bottom and the top. Price will always come on this area, this lower part of this. This is a tool I use instead of Fibonacci, guys. So sorry if you don't see the Fibonacci. For me, this is the discount. This means that we have a higher probability of price pushing back on discount and we go up. So you can see once I have this is my discount area. I can now go to any time frame I want, 1 hour chart, and you can see I'll come up with a very nice demand. This is a 2 hours, not even a 1 hour chart. There's a demand that is here, probably on 2 hours time frame. Let me see, on 2 hours time frame, 1 hour time frame actually. Okay, when I go to 1 hour, I'm gonna refine it a little bit lower, but I want to keep the 2 hours time frame because that's where my discount start from. So this means that the next demand, right? The next demand is here. The next demand is here. So we can say this is our next demand to go long on a larger time frame. Well, this is the demand that I'm gonna use to go long on a larger time frame. This is the demand. And I'll fade this first line here. Fade it out. Fade it out like that. So this becomes a demand. For those who want to go with the other concept, smart money, you can say this way you have the chalk in a larger time frame. This way you have the chalk. We talk of the change of character. Then this way you have the demand. So what do you want? You want to wait for market to give you pull back, right, to that area. And that's where you get the pump to the upside. Pump to the upside. And this is another area of interest for tomorrow. Now let's do one more pair. One more pair. I'll not really do a lot. If you guys want more, you can let me know. Now let's do one more pair, which is the other pair. We have the Euro card here. Euro card, a big move to the upside. Let's see what we have here. So in Euro card, let's go to always the larger time frame is the daily to support the trend. Look at this time frame. The trend is still bullish, right? The trend is still looking bullish there. So where is the current price? The current price is here. The current price. Go to a larger time frame. This one, I don't have even to go to a larger time frame actually. I can just use this one. But if I'm here, on the weekly chart where we have the big barrier, can be a little bit higher. See, go a little bit again higher. Like that, and we keep pushing to the left. And keep pushing to the left, and we want to support the high quality. This area is no longer fresh. In terms of weekly time frame, it's no longer fresh. So we'll go a little bit higher up, move to the left, like that, and let's see, where do we get another high quality supply? Okay, this thing seems doesn't have any more history. So on this one, I'll have to use the daily chart. The daily chart. Let me use the daily chart here. Actually, I'll prefer this supply zone here. If you go along this one, but I don't want to use this one. I want a little bit, because this one can easily take it out. Want another one that's a little bit higher. Okay, let's see. Oh, okay. Do you have anything here? Nothing. Technically, there's nothing. Let's go back to the left. Let's go back to the left. Load up, open up, load up, open up. Okay, so here, I think most of this area I'm looking for, they're all taken out. I can't even see on a daily chart anything that is fresh. So I can't see any barrier. This means that we have a free space to the upside. Can't see any high quality supply. But on the lower side, we would say the demand was here, which was very fresh. All right, the demand was here, which is very fresh here. According to this larger time frame, price never really got to touch this area. Price has been coming around this area multiple times and pushing away. If you look at the value of it, you are undervalued against the dollar and gold. This means that a good probability to go up. So already we have this institutional move. A new demand has been created here. A new demand has been created here according to the daily chart. That's our demand. Now, according to weekly time frame, I want to see what happened here on the weekly time frame. On the weekly time frame, just have a shooting star by itself. Probably we're going to get a pullback right before we go up. So here we just have that. Let's go to the 4-hour chart. In the 4-hour chart, this is the base. The base is there, it's here, and price was undervalued. You see, we got that pump to the upside. So here we have a very nice institutional move to the upside. This way we have the base, the market side of balance. This is the best place to really participate in. So right now, for those guys talk of the change of character, don't have a change of character here. I'll not say that we have, but this is the best place I want to purchase to really participate in this trade. I'm trying to use a different time frame to see if there's any other demand. There's no any other demand. 1-hour chart, 15 minutes chart, there's nothing. So what does that mean? Price, we have to stay out of the market until market pulls back around this demand. So this is the only demand that we have to buy today, upside, right? So if we're looking for a setup on this Euro card, that's the best place. I prefer to go long. The supply, you see, we'll talk of the supply is all the way up there. So we still have some space. If you can pull back, open and come all the way down here, we are ready to go in for a buy. So guys, I'm gonna reach here for today. And if you like my content, you want to see more of this, just drop your comment. Otherwise, guys, have a nice week. Profitable week ahead. Yep.